The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. Hope you're having a good Friday morning there in the States. Got a big unemployment report coming out in just about 30 minutes, 35 minutes actually. So, or excuse me, 25 minutes. We're going to just really kind of walk you through that. I just don't see really this one. I mean, this is kind of the last economic report before the Fed meets. You guys know that. And the one that had, or economic report that has any impact. But, the market's on all-time highs. The housing market kind of, is doing its thing. And a quarter point seems like pulling teeth. But I think they're going to actually do it. So I'm not really going to be doing a lot of trading off of this report today. I've got gold up right now. And, we always talk about trying to block out one side of the market, block out one side of the trade. And we've been looking at gold and trying to look at, where's the edge, where's the leverage. We always try to do that. We walk through the time frames and, just kind of case in point, we're down. Juan was actually talking about some lower numbers yesterday. And by the way, we're going to try to have Steve Banger on today and talk a little bit after this report with him and kind of get that macroeconomic forecasting thought process that he's so daggone good at. But when you look at gold, in that instance, when you're in that frame of mind and trying to block out the long side, you're just passing on these blip ups here. I mean, those are the riskier trades. And the easier trade most of the time, the one that you kind of can have some deep convictions about, is trying to hit, this is the 240, kind of still guiding this thing down, is to try to hit these areas up here. I don't know if there's just a massive whoosh left in gold right now, but there's really nothing on the screen here that makes me really look technically that anything's changing on the downside. That being said, we got to hit the dollar. As you know, quite a few commodities are priced in dollars, and the weekly, the daily, we're again passing on the shorts on these daily unfair highs on the U.S. dollar. I mean, the stronger trade here is to just, we got up in here, we had a new profile attempt to appear, we were rattling around above profiles for a little bit, diving back into it. A lot of times when we dive back into profiles from above or dive up into profiles from below and get those daily closes in the meaty part of the bell curve here, a lot of times we'll explore that entire fair auction. And that doesn't mean, hey, we got to get on the short bandwagon, staying with that concept of trying to block out one side of the marketplace and where's the high probability setup. You're really waiting for 99.74, or you're waiting for breakouts possibly above 101.54. But the dollar's kind of come a long way pretty quickly. And I think Joey and I were talking about 103 and maybe even a little bit higher than that, 103.5. Doesn't have to go there in a straight line without any volatility. So this is your 99.74. That's your big back the truck up number on the U.S. dollar. Let me look at the DIN here. All right, so let's hit the S&Ps really quick. We got to cover some bases before this report, of course. We talked, again, this was a scarier trade. We talked about trying to leverage off this 2207 a little bit, and then 2200 was where I started feeling relatively comfortable. We talked about that on the show yesterday, and I think when we were talking, we kind of had a little bit of a rally up into that area. I was trying to relax my stops a little bit because, the market had kind of come to me there on that trade. And Juan was a little bit more bullish, and I'm a bigger fan of, looking at breakdowns and profiles. And when we started kind of cracking the armor here on the 240s, started looking at that retrace back up as a chance to do a contra trade, not a long-term trade. Talked about the targets really only were And I think they've been hit this morning to the tick down here. Let me see. What's the low? 2184.25. And that weekly unfair high, we talked about 2184.25. There it is. So, this is it. This is that massive 20-point pullback in the S&Ps that now seems like a big deal when it pulls back 20 points. But that's it. That's the trade. I mean, now you got this big report coming out, and you should be out of this short if you did daringly do this trade. Which one, Joey? One. Okay, so as we look at that, and again, that was a short-lived, short-term trade. The long-term stance still is you got big support between 84 and 73 on the long side. I think it's a foregone conclusion that they're going to raise rates, so I don't really know any, jacked up numbers that are going to, oh God, they're going to raise rates. I mean, I think that's kind of baked in the cake here. So we could be looking at support there at 84 down to 77 on the S&Ps. The bean trade, we kind of did hit those numbers, 1025 off that 1050 kind of reversal situation, 1049 and 3/4, I believe. Nothing to really talk about there. We may have somebody that comes in and talks about grains in the last half of the hour, but I'm not so sure yet. I hope so. Be good to quiz him on what's going on with some of the wheat situations right now. Let's keep looking down the line here. Here's the 10-year. So, we could kind of be in one of those situations where we might just kind of, buy the news, I guess. Here's the 240s on this, but I think if you're smart, it's a Friday, it's baked in the cake. You just kind of leave these particular instruments alone. Let's take a look at a couple of stocks we were looking at this past week that just really completely got dismantled. Big Mo, we talked about. This was a scanner pick. Talked about it yesterday morning. It's the gift that keeps on giving. There's that inflection point we sold, and I just want to point out that this thing is just now below daily profiles and looking like it's actually going to head to 6150. All right, we're going to take a look at Twitter really quick. Wow. This is almost one of those stocks where I think you get, like Steve Banger had talked about before, trying to trade the volatility play on the S&Ps or the VIX. This is one where I think you just kind of, you buy some lottery tickets way out on some months out and just wait for the next stupid news story to come out on this stock of who's going to take a shot at taking this over. Guys, we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, showing the NASDAQ right now, and I think we're going to have Steve Banger on right after that report after the break, so we can talk about that rate scenario. Let's take a look at the NASDAQ. This is one we were talking about was just a little bit easier to deal with than the S&Ps. Here's a weekly on the NQZ6, and we are trading below weekly profiles. This is wild. And what do you do with it now? And again, I think, this report baked in the cake. I think you just got to wait and trade the reaction on this kind of move around in these underlying indices of the U.S. stock market, and that's just the way I'm looking at it. I'm not really a big fan on taking some big stances today because you really don't have any edge. I mean, there's, I think, a report that's not as inflationary, so to speak, and everything's heading to that report looking that way, inflationary. I still don't think it's going to rock the boat as far as the rate scenario and the path that it's probably going to head down. Let's take a look at a couple other stocks that we talked about last week. Let's talk about, this week, beginning of the week. Coca-Cola, still the gift that keeps on giving, just like kind of the Big Mo trade here. Man, I mean, just really something sick, multinational exposure, blah, blah, blah. And where's the end in sight on this one? It's not on sale yet, folks. There's really no new profiles attempting to appear here, and we could go lower. Things on the lows can go lower. Trust me on that one. Let's take a look at international paper. This is one we were looking at in the long camp. I don't know if you remember this, beginning of the week. Looked at this, the close above. Last week we kind of put it on the radar screen, was rattling around above 47.70, and then kaboom, 47.70. And the launch has happened. So what do you do with international paper? I don't think you even touch this thing. I think you just let it breathe. Every time I say see the word launch, I think of, God, is that the easiest way to raise money now or what? TFNN. They're having a new launch product to go to Neptune in the year 2089. It's a big deal. Tom's collecting all kinds of money right now for that. Anyway, Let's get back to the market here. Let's take a look at BABA. Here we go. All right. So, pretty much of a loser day yesterday for Alibaba. And this is kind of interesting here. Again, the scanner's going to pick these out for you. Just plain as day. I think Russ was talking about this trade the other day. Let me pull up the right scanner here. The stocks that were in breakdown mode had just kind of started creeping into a kind of a voluminous situation. And man, look at them now. And a lot of things in here you can find are indicators in themselves. Alibaba, if you're trying to find things that are, downtrend resistance is one of my favorite sorts here. It's going to put them on your radar screen, and some of the stocks you can read these like a matrix here and just kind of look at the numbers, the errors, the colors, the cells, the time frames, and really, okay, I know what the drill is on this one. I've seen this before, and be able to kind of just really get down to business quick. And Alibaba actually was on that scene, breaking down on the strong weeklies, and then being in the tech sector. Who knows what Trump's going to put the whammy on these guys too. While we're talking about that, but technically it was a very attractive situation. Okay, so Amazon, on that same note, big wide profile that came out at the beginning of the week. We talked about this. This is just an amazing situation to have a profile just pop out in the open like that. And that usually means just, okay, we're kind of petering around here. Get ready for volatility. So these inflection points on a big wide profile on a relative scale really, the automated systems are going to try to ring the register on the inside of this thing as much as possible and pass on breakdowns or breakouts. So when this happens, you're really licking your lips, hoping for 723.81 to be hit in this case. And that's, got a little bit of a noise factor down to 17, 18 and a half. But that's a chance to really start looking at, doing the pretty decent trading bouts. There's the top of the profile on the daily on Amazon. But that's the real high probability situation. Big wide profile, 723.81 to have a trading opportunity. I'm not a big fan of investing in Amazon right now, but if you go to your local brokerage shop on the corner, they'll tell you that dollar cost averaging is a part of the equation. Let's take a look at GE. All right, so talked about this one, just similar to international paper, really. Getting above profiles, rattling around above, and then you wait for the launch. Did I say launch again? Here we go. And I had some help on the dailies here on General Electric, so you really don't want to think about taking this off right now. You want some new information to appear. It's going to not go in a straight line, but I think you're still good on the long side on this one. Johnson & Johnson, a lot of lawsuits coming down the pipe on this stock. It's kind of the gift that keeps on giving. Now you're getting below last week's lows and don't see any divergences here. Still think Johnson & Johnson is going to be a dog for a while. A lot of people are just flat out exiting that stock. Home Depot, been looking at this one. I was hoping we could reverse back down in the box below 130.74. Got a nice little bounce there, but I think we could actually start exploring a lot more of this fair auction down below. And, the rate environment may change a little bit here. Housing could kind of flutter a little bit, and we could just start kind of coming off a little bit on Home Depot. Pay attention to that one. All right, let's take a look at Microsoft. Well, you're getting the pullback. 58.49 is a big number on that one. That's one I think you can play around with. Joey and I were talking about this is a great investment stock. It has been for a while, but you're going to have the back up the truck sound coming into play about, let's see, maybe another buck down here. This thing was looking incredibly well when we broke out about 53, came back and retraced, launching pad. Had to pay attention to the profiles, but again, I don't think it's over for this particular stock. Let's see what the S&Ps and the notes are doing. We're coming right into this break right before the report here. 2190 just edging up slightly off of that 2184.25. That's going to be the big number, guys. We'll be right back, and we'll hopefully have Steve Banger with us.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, we know that song's from Chicago, and I think we've got Steve Banger from Chicago. Steve, are you there?
John, good morning. How are you?
Good. How are you?
It's another beautiful day, and it is Friday. Doesn't get any better.
Thank God. Well, how's the report doing here? I was looking at the Saudi stock market there. Let's take a look and see what's happening. Is it out yet?
Because I'm talking to you, I haven't really looked yet. But 1 second. Let me take a quick look.
All right. Steve Banger from Chicago is on with us. We're going to talk a little bit about the rate outlook and maybe how to make some money with some of the plays out there. All right.
Sorry. I'm waiting for it here. I don't know.
Is it out yet?
It should be.
Anybody in the
but
den?
I don't see it.
Should be out.
Anyway. So it
Well,
should be an
looks like
interesting day though
Notes
today.
are rallying a little bit here. Yeah. Go ahead. Not much.
Yeah.
178,000. So that was more. What was expected? 158 or something like that.
Actually 175. It's right on the nose.
Okay.
178. Yeah. All right.
On the
So
notes.
as expected, right? So it shouldn't really do much to the market one way or the other, at least at first.
Right. Well, listen. Would you like me to show that chart that that I've got teed up on the TLT? Hello? Test, test, test. Okay. I think we lost Steve Banger. That's what. Okay. All right. Well, I'll tell you what. They're going to try to grab him again. We will get into this TLT chart in just a second. Yep. Kind of a muted reaction here, just coming right off that 2184. And that's going to be about all she wrote for today, folks. I don't think we're going to have a lot of movement on Friday. Yeah, notes are climbing. Not significantly. Okay, Steve, are you back?
Yes, I am.
Great. So, you may share that TLT chart that we were talking about earlier? Is that something we could start with?
Yes, why not?
Okay, great. All right, so I'm going to let you take it from here. I'm showing it right now, and then, we can actually talk about the VIX a little bit, too, because I was talking, we were getting down to your 12 number a couple of days ago, and I think we've moved up, to almost 20%.
Yeah, I mean not on the actual instrument, on the actual volatility, yes. But let's talk about interest rates for a moment, because I think that's really what's driving the market right now.
Let's do it.
So the chart you are showing right now is a 15-year chart of 20-year plus Treasury bonds. So each bar represents a quarter. And the bottom shows the actual net change for the quarter. So if you back out of the chart a little bit, that they can see a little bit more. The current quarter, or the last quarter, the last 3 months, were the biggest loss in the past 15 years in prices. So in other words, the yields advanced the most in the past 15 years in the Treasury bonds. And that is, by all accounts, a major market move, right? I mean, this is very, very significant. We haven't had that type of movement in more than 15 years. And if memory serves me correctly, it's almost like 25 years when the last time we had such a move. So what is happening in the market is that there is a rather rapid repricing towards a higher growth environment. And that is very significant because low interest rates, at least in my opinion, have been driving and supporting the stock market for the past couple of years. So if low interest rates are no more, corporate profits from here on out have to drive valuations. So corporate profits have to grow in order to justify valuations, because on the interest rate side, there's no more help. So we are really interesting. So it's a really interesting environment right now.
Yeah, and it's everything. I mean, we're in the middle of. We try to do a lot of things on a day-to-day basis together, and this business world is. I mean, margins are. It seems like they just get caved in so quickly. It's like there's no longevity of margins in anything, unless I guess maybe you've got a cure for cancer or something like that, because it just seems like things happen at light speed. Competition moves in. Everybody. I mean, we write software. You and I were talking about this. It's as soon as you think of something, a new idea or a new solution, it's like free in 4 to 6 months somewhere else. I mean, it's crazy. So what's your outlook on the margin situation, profit margins? Because David White actually was pointing out maybe a month or two ago when he and I were talking how Apple's margins, it's a trend that's probably not going to end as far as, margins becoming thinner. What do you think the corporate profit outlook is, or earnings outlook is moving forward, Steve?
Well, I mean, a lot of it really depends on actual GDP. As soon as GDP starts picking up, and there are clearly some signs as it is, then at one point corporations will regain pricing power, and pricing power means increased inflation. Increased inflation is what we see in the bond market right now, right? Because that is the reason why bonds have been selling off that dramatically.
Right.
So I think there's some argument to be made that we are on the cusp of margin expansion in the economy, because the bond market is already signaling that. And I mean, just to put in perspective, 1 year ago, 1 month's LIBOR rates were at 16 basis points. So corporation could go out and on an annual basis roll LIBOR out and finance the purchase of new equipment, vehicles, machinery for 16 basis points. So money was, for all intents and purposes, free. Today, that same rate is 64 basis points. So it basically quadrupled over the period of a year. And it's only 64 basis points, but if you come from a zero base, that's a very significant number. So you better get your margins in shape, otherwise you're going to take hits on the profitability.
Right. Wow. That's an amazing new spread. Wow.
It is. I mean, it's huge. I mean, it's just versus the beginning of the year, margins have doubled. LIBOR rates have doubled.
Right. What does this do? I mean, does this open up new trading opportunities? Like, Chicago, I kind of always considered it was such a blue-collar trade, in the border trade and the options exchange. I mean, there's a lot of arbitrage situations. Does it? Tell you what, I hear the music. Can you hang on until after the break? Okay, great. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, thanks for coming back, folks. We've got Steve Binger on from Chicago, and Steve, what I was going to ask. I hope you can elaborate on this. You're right there. A lot of the things in Chicago, we were in the Board of Trade together, but a lot of the trades that were available previously in a rate environment that wasn't in the seller, do any of those trades come back? I mean, or arbitrage opportunities or anything that was a former moneymaker that just got collapsed because of the rates just going to zero?
Well, I mean, the big trade which has kind of run its course is really the readjustment in long-term interest rates, right, in treasury prices. Because if you look at the chart I sent you, that's a 15% market move over the past 3-4 months.
Right.
But out of that grows another opportunity, I believe at least. So the reason why the interest rates on the long end adjusted so dramatically is because GDP has accelerated quite a bit. First quarter this year was 0.8%, second quarter was 1.4%, last quarter was 3.2%. So we have a very significant jump in GDP growth, while at the same time the Fed funds rate have been left unchanged, right? I mean, the last time the Fed touched interest rates was December last year. Now, the long bond is clearly signaling that interest rates have to change. That is what that really means, right? The bond traders adjusted to a higher growth outlook, whereas the Fed funds rate, the Federal Reserve, have not. So the other market which hasn't adjusted to it, arguably, is the stock market. And the last time the Fed raised rates, which was December last year, stocks had that 10% down move, if you recall that.
Right.
So the stocks didn't take that adjustment very, very well. They sank 10%. So if I were to put my money somewhere, like really have a 5-to-1 trade, something like that, I would buy a couple of 3-4 months out of the money S&P puts, because I think there might be a significant gyration once we go
that
to the Fed meeting.
That makes a lot of sense after you explain it that way. And the way things have happened in the past, like you said, I mean, this is kind of an indicator, and we've had a big, massive move in the long end of the curve. Why wouldn't you take a shot on that? I mean, that volatility is pretty low. The puts aren't pumped up right now, and now's the time to kind of dig in on something like that. And if it happens, it happens. I mean, the 5-to-1, I think you're probably more closer to 10-to-1 on that trade, aren't you?
Yeah, I mean, if you get a 10% correction for sure, but I don't
Right.
necessarily think. I mean, who knows if you get 10%, right? But
Right.
I think it seems entirely plausible to me that if the bond market adjusts to a higher growth environment, and the Federal Reserve is late to the party, because arguably, when you look at the growth in GDP, they are now late to the party, that the market will be spooked by the prospect of the Federal Reserve having to rather aggressively tighten rates from here on out. Because that's really what the bond market is telling us, right? I mean, it's too little too late. So the 0.25% we're going to get in December is just a forebringer of other things to come next year. And that is going to be the problem which might trip the market.
What's the chance that these babies are going to actually take a stance and raise it 0.5%?
I was just going there, John.
Go ahead.
Yes,
Go there.
You're absolutely right. I mean, I honestly think, given the projection or given the trajectory of GDP growth over the past 9 months, that a 0.25% is too little. In particular, with Trump coming in and saying point blank that he's going to kick off some very significant spending programs. So I think for the first time in a long time, the argument can be made rather convincingly that the Fed is late to the party. And whenever that happens, we usually get a scenario whereby the Fed loses control of the market. And if that actually establishes itself, then there's going to be some gyration in the stock market to the downside. I really believe that.
Well, that's a great logical argument you just made. I'm actually wanting to go out and buy puts right now. The thing is, okay, so now that our GDP is kind of ramping up, does that mean we get to have a higher, the clock tick, the debt ticking higher? And what's that going to do to the dollar? Is the dollar ever going to? Is anybody trading the dollar ever going to look to our out of control national debt?
Well,
I think. And what does the interest rate environment do to all that?
I mean, on a debt to GDP basis, we look okay right now, right? I mean, you're basically right around
on a relative scale.
Yeah, I mean, like our annual deficit is around 3% right now, which is very easily absorbable when we have a 3% GDP growth or higher.
Right.
So I'm not really worried about that right now. I think it's going to become an issue once retirement of the baby boomers hits full swing, but I don't think that's an issue right now. One part of it, going back to what we discussed a moment ago, is that there's usually a lag time between GDP rising quickly and corporations establishing pricing power and widening margins. And that is something which is potentially a little bit more difficult to handle. So I think we have this period now where interest rates going to shoot up or have shot up already for all intents and purposes. The Fed has to adjust to the new environment. Corporations haven't really been able yet to lever off that environment and increase margins. So I think that Goldilocks scenario we had for the past couple of years is done.
Wow. Well, that has to create some volatility in the markets, which I know you've been dying, waiting for more volatile scenarios to pop up, and they just seem to die down into nothing every once in a while.
I agree.
Or not every once in a while. It's only every once in a while that they raise their head. But what? Got 30 seconds left here. What's the best trade on the books right now, as far as you're concerned? Maybe the put trade, I would go into year end and early January. I would go with a couple of puts. Nothing crazy, but if the market truly does do a 7% correction or so, which I think completely possible, it should be an easy 5-6 to 1 trade. I think that's very. I think that's likely. Well, man, thanks for coming on today. It's just awesome to talk to you, man.
All right, talk to you later.
All right, thanks, Steve. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. And Steve Banger was on last 2 segments and just made an incredibly logical argument. That the market, the risk reward scenario really is a decent setup in the market coming unglued a little bit here, based on some things having to be ramped up a little bit quicker from the Fed possibly, and the market just getting spooked because of the impending and apparent adjustments that have to be made. And having to play catch up with the long end of the curve, and this is not, like you said, the Goldilocks scenario is over more than likely, and we're going to see really the results of bearing inflation in many different forms and fashions. China, the dovish Fed situation, and when these rubber bands get stretched out like they can snap back pretty hard. So I like the argument, and I like the trade actually, and I like the simplicity of it. Just buy the puts. So good thoughts there. It's a waiting game, that particular trade, but that's not a bad thing to have a certain part of your trading world in kind of a lottery ticket. Just kind of wait to see when and if it's going to happen. All right, I tell you what, we got about 2 minutes left here, so let's go into I want to show you something We built a special version of this scanner for a couple of friends of mine in Saudi Arabia, and this thing literally has been a little print and press lately. We've got an algorithm in here that trades. It kind of gives you the long entry, target, stop loss, keeps a running track record, previous trade, what it was, and then you've got the percent profitable for the month. I mean, it didn't hurt that the Saudi market just literally exploded, and that really, I started watching this. It started moving a lot sooner than oil started getting legs. So a little bit of a indicator in itself here. But here's the weekly on the Saudi market. We're kind of getting above recent highs that we had back here in the spring of this past year. But it's a nice little algo in here for those guys, and just wanted to show you that. Here's something else I wanted to pay attention to today. I didn't get a chance to talk about it much. The breadth numbers are still, on a long-term basis, still positive, just kind of hanging in there. Even though we kind of had our 60-minute rollover and never really looked back since the 29th, we're still, right now, 2184.25. We bounced off of it. Breadth staying positive. And if the market opens right now on the S&Ps, let me go back to this. We're down about 3 or 4 points. I think we're still going to be breadth positive, and we're coming down to that inflection point, 2184. If we start turning breadth negative, and you got to keep your eye on that, and we start hovering around this 2184, we could start moving south here, and having breadth cross over to negative territory while we're crossing 2184. If we end the week back in this fair auction below 2184, definitely going to start seeing some lower numbers next week. That's just the way that works. So, guys, it's Friday. Don't get too caught up before the weekend in some mess you're going to kick yourself over. Trade lightly. Steve, thanks for coming on today. Great logical argument on the put call. And stay tuned for Larry, guys. Have a good day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.